know, I must admit, I didn't think we would see that much change before Abel actually takes over. But apparently, Berkshire will look very different when that's the case. And to some extent, at least, that makes it even more interesting to me in terms of what direction Berkshire will take from now. And who knows, perhaps we'll get a couple of interesting announcements in a few months at the shareholder meeting in Omaha. And that would mean lots of stuff to discuss for both you and me, and also all the members of the Intrinsic Value community who can make the trip and join our private events over there. And yeah, how about we actually zoom in on John Elkann a bit more, though, since he does seem like such an important part of the story here. Unless I'm missing something, it seems like the market must think that he's absolutely horrible at his job, or maybe even the private investments are just dramatically overmarked. Although, as you said, that's a small piece of the puzzle if you look at the actual value of it compared to the NAV. So maybe it's a mix of both, because if you say the historic discount is closer to 20%, I don't really know how to explain the current 60% discount that we have at the time of recording. And from looking at the space myself, I must say that 40 to 50% discounts are not unusual. I actually owned a holding company in Italy with also quite capable management teams that still traded at 50% discounts all the time. But apparently, Exor has no history of such high discounts.
Well, it definitely gives me pause when I'm thinking about the thesis here involving some kind of closing of the discount. And you're telling me that this is not uncommon for European holding companies, which is why I think we make a good team, because I can definitely bring the American perspective, maybe the ignorant American perspective, but Daniel brings a great European perspective to balance things out. And so anyways, John Elkann is essentially the leader of the Agnelli family now, but he has been so for a long time. He assumed chairmanship of the company in 2007 at 32 years old, after he had previously been nominated as Gianni Agnelli's successor at just 22 years old in 1997. And so in interviews, he's talked about what it takes for a company to actually survive for 100 years. And something like 45 public companies in every 1,000 are even close to enduring for that long. But what he inherited, he believes, was really a bit of a mess compared to where it is today. And so let's just listen to Elkann describe things himself and what the family did, as well as what happened to Fiat to turn around Exor's trajectory.
How dire was the situation when you took over?
Incredibly dire. I mean, if you look between the financial and operational difficulties that the company was facing back then, the likelihood of us not making it were extremely high.
So what did you do?
Because
you talk about the different phases that you've been through in EXO after you took over. So what's the first thing you do? You come into that situation, it doesn't look great. What do you do?
We ended up as a family investing in the company. So we committed capital, which strengthened the balance sheet and renegotiated with the banks. That allowed us to have headroom. We were fortunate to appoint Sergio after having appointed 4 different CEOs before within those 2 years who did not work. And Sergio gave the company a complete projection with a turnaround we worked on. And the moment in which we launched the Fiat 500 in 2007, which is 50 years after it had launched being the first time, was really a moment of where we felt the company was actually flourishing.
So yeah, in the early 2000s, they're looking bleak for Exor. And now, in my eyes at least, Elkann's track record speaks for itself. Exor survived the financial crisis, and its subsidiaries really turned their businesses around, especially Fiat. And so over nearly the last decade, Exor's NAV has compounded at 13.5% a year. And if we look from 2009 to 2024, NAV compounded 18% per year versus the MSCI World Index, which returned only 12% annually. So a decade of outperforming the MSCI by 600 basis points, 6 percentage points a year. I mean, that is no joke. And so I'm really not sure then why the market is so hesitant to give Elkann any credit. I mean, I have some theories, but boy, it doesn't line up. And I guess the criticism is that some people see this outperformance as being entirely thanks to decisions made in the past, like with Ferrari, because that's a decision that goes back 5 decades. And with Fiat's turnaround, that actually had more to do with the actual CEO of Fiat. So again, you can see how people are willing to not give Elkann credit. But then I would say if Elkann is the one who selected the CEO that turned around Fiat, I see that as being an important and successful allocation decision, right? I mean, picking the right people to put in place is not always easy to do. And so on top of all that, being able to ride out a bet like the one they've made with Ferrari without ever panicking or selling should be worth something too. But that's just not how everyone sees it. So anyways, I mean, since Exor first spun off Ferrari out from Fiat Chrysler, Ferrari has delivered a total shareholder return of over 11x, while the MSCI World delivered just a 3 times return in that same time frame. And so as a result of the strong performance from Ferrari, the stock has gone from comprising 15% of Exor's net asset value back in 2015 to nearly 50% today, as we've talked about.
Another thing we talked about prior to the recording here is that to some extent, the concern with just any family-owned company is that the first generation, or maybe the first two, will have the work ethic to run the business well and appreciate the opportunities before them, while later generations will become more spoiled and maybe just lose that hustle. And I actually love this quote, though. It comes from Giovanni Agnelli, who passed on the torch to Elkann when he died in 2003. And he said, groups like ours typically go through 3 stages in their development: a time of strength, a time of privilege, and a time of vanity. For me, the first is the only one that counts. And as we heard in that clip a minute ago, when Elkann took control of the company, it was in a rough shape with large debt loads, high uncertainty, and just tough conditions at a number of their industrial companies in the face of the financial crisis. And it looked like a time of vanity had consumed Exor at that point and just hollowed out its intrinsic value from the inside out. And since then, I don't have any issue with saying that Elkann has been just terrific at his job, and he has led what I think this rare resurgence that you don't normally see in these European family holding companies. And it's almost like he dialed back the clock from that stage of vanity to a time of strength again. And Elkann's stated goals have been to achieve strong growth in value per share and to build just great companies. And well, Exor's NAV compounding track record, I would say, speaks to him achieving that. And it's probably fair to say that Elkann is a good capital allocator and also a good selector of managers, as you just alluded to. So I don't know who's not wedded to any specific asset in the portfolio, not even Ferrari, even though it might have been the main reason for outperformance in the last decade. And the company will frequently hold, buy, spin off, and sell wholly owned businesses and make minority investments in publicly traded companies and also in private companies. And it's very dynamic, pretty much like Berkshire Hathaway. And that's one of the things I really like to see, because I wouldn't want them to buy and hold these cyclical companies, but seeing them spin off and also selling off companies again and again is actually making me more confident in their ability to keep doing that. And the most important decision Elkann ever made, as you alluded to, was in selecting Sergio Mattioni as the CEO of Fiat in 2004, who just served the company brilliantly until his death in 2018.
During Elkann's tenure, Exor acquired Chrysler in what was a pretty great deal with the US government during the financial crisis. He spun off Ferrari and then CNH Industrial from Fiat. And you'll notice that both of those are still in the portfolio, and merged Fiat with Peugeot to create Stellantis and make it easier for the company to exit the business if they want to, simply by selling shares in the now listed company that is Stellantis. And he's also overseen the launch of a venture capital fund and some other early stage investments like this that are, in his view, meant to help bring Italy into the 21st century and beyond. And it's really interesting. He almost thinks of this as it's not charity, but his investment in the public good of kind of modernizing the Italian economy. So I don't know. I don't put a ton of value on this part of the portfolio. It's probably similar to the other bets division at Google, where they almost all are losers, but maybe every now and then you get something that's a big hit. And now they've got former Apple and Amazon executives helping to lead these venture investment teams, having invested some $600 million in over 100 promising companies globally, from Neuralink to the payments company Brex. And they actually host the largest tech conference in Italy. And they've taken a lot of learnings from Y Combinator, where they essentially put small amounts of seed money into these batches of startup founders.
I mean, honestly, this sounds like a great story to tell, and I think it's easy to get excited about this. I still think the biggest concern here, and perhaps the reason there's this huge NAV discount in the first place, is that nobody wants to see them diversify out of Ferrari holdings. I mean, That means diluting their portfolio with lower quality businesses or also these startups, which all sound great. Let's be honest. I mean, most of them will not work out. And in the end, you only buy Ferrari at a discount if you ever see any money from these other investments that Exor makes. And if that's not the case, and the stake in Ferrari is sold off to fund these other ventures, well, then the discount gets smaller and smaller, and shareholders will never actually benefit from it. So when you're telling me that they've kept stakes in Stellantis and CNH and are kind of expanding into venture capital style bets, which are just notoriously difficult to do well on, then yeah, I can see why people are worried about the net asset value quality actually being diluted over time. So why don't you tell us more about this transaction they did recently to actually trim their position in Ferrari? Because I think that is what has elevated investor concerns and just caused this huge discount to NAV actually increase instead of decrease over time.
In March, they completed the sale of a portion of their stake in Ferrari for about 3 billion euros. And the way they rationalized that was to say that on the back of Ferrari's really continued excellent results, the share price had increased to a euphoric amount, to a really historic high, despite some of the headwinds that have been facing the luxury market that we learned about when we covered LVMH earlier this year. And so this was the exact line from John Elkin about it. He said, at Exor, when we think about our portfolio's composition, we like concentration because it encourages us to remain focused on what matters, but we also recognize that we need some balance. This transaction both reduces the concentration in our portfolio and provides the funds for a sizable new acquisition. As I underlined when we made the announcement, our support for Ferrari and our belief in the company's potential is unwavering. So there you go. And when we're talking about the stock's discount to NAV expanding as it has, you have to think there's a concern baked in there that they're on this trajectory of selling out of their Ferrari stake entirely. At which point, the narrative around Exor just gets messier and honestly a whole lot less exciting. There's no crown jewel for the markets to have faith in, and that would just make me much less optimistic about their ability to continue compounding net asset value and to close that discount with the market price and valuation of those assets. And so, trimming the position a bit, that maybe that's fairly pragmatic, and especially the timing of it. They did sell around a kind of a high in the Ferrari shares that have since pulled back a lot, but it's hard to say. I think the timing of it looks good, but if it's something they do a whole lot more of, that would make me nervous.
Oh, I totally agree. And at the same time, it's kind of hard sitting here criticizing them for it when we didn't buy in at those prices in Ferrari either. And I don't think they would sell out of their Ferrari stake entirely. It just doesn't make much sense to me. But it gives me some pause too, to see them sell Ferrari because it is overvalued. Because in the end, if Ferrari shares drop and they simultaneously use cash from selling Ferrari to fund those other ventures that we talked about, the discount can just quickly drop because the Ferrari stake is losing value and the money is redeployed in less good businesses. And that said, this would be pretty much a worst case scenario for this stock. And I don't think the management team has done anything that would justify expecting such bad capital allocation decisions, and especially considering the buyback program they already have set in place.